Good morning, I'm Giuseppe Basile, the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good morning, today is Friday, March the 15th, 2013. It's 2:30 p.m. Italian time. I want to remind you that the Italian time zone is GMT +1. This is a quick video review on the EURFX currency futures contract. I will review the daily and the 4-hour chart. I think there are huge developments in the euro, and I've been sharing this on the Forex Factory and on my blog as well. So let's start from this daily chart. What you see on the screen is the EURFX continuous contract aligned to the June 2013 expiration, and those who follow me know that we have been following this sequence of measure move lower in the last basically in the last month, between the beginning of February down to the end of February, and then we had the lateral move in the last 2 weeks. So this is the sequence. The 131.80 area never hit target since the beginning of March, and then eventually it hit the target on March the 8th, and we have our last measure move lower was from this level to lows of March the 8th, and we had this 130.70. that was the last measure move. As you can see, it hit target in the 129.20 level, and then the next measure move lower failed, and when that happens, we know that we have a break of the sequence and the start of a sequence, a move higher. Where this break came, it was after testing an important area of support, which comes in the 129.10 area. Actually, the low was 129.18 on the new contract. So the reason why we broke the sequence of measure move lower is because there was participation on the long side coming from this huge level here, and my belief is that we just started a move higher that has the potential to bring price into the 141.10, 141 area. Now let's see what happened in the let's see what we have on the 4-hour chart at the moment. Just to remind you that this 130.20 level here was the level I was watching yesterday, and I said if price comes above it, then we have a break of the sequence. So let's move to the 240 minute chart, and I want to show you the sequence of extension measure move on this chart. We have the first trace goes from the highs in 129.61 to highs here, and we had, as you can see, the 130.10 area supported price nicely yesterday, and during the Asian session we had this small move higher, and then during the European session we had these two big bars, and the first one brought price into the first target 130.60, and the second one brought price into the second target 130.89. So the next measure move of the sequence is then traced from these highs to highs, and you have a very clear line in the sand here. That's the 130.70, 130.67 level here, if I trace this correctly, but you'll find the actual levels on the blog. So what we have here, we have a clearly line in the sand. We can correct now, and we are going to probably test 130.80, and if we bounce, we can continue higher into the 131.30 area and higher. However, if we go below the 130.65, then we have a correction. This line 130.20 was the line I was watching yesterday to the greedy end of the sequence lower. So if this 130.70 level, 130.65 level is breached on the downside, then We have two. We have several places we can go. Actually, there is this low to high in the 129.80, and there is also the possibility of all the way halfway back retracement into this 130. 130.20 area. So if we break 130.70, there is no rush to buy this market, because we are going to get a retracement either into the 130.20 area or even lower in the 129.80. So maybe you want to split the buys here to build up your position as we move lower. Of course, I mean, there is still the possibility that lows are retested, but as we confirmed the support with the end of the sequence of measure move lower on the daily chart, as I showed you before, then a retest of this area should actually hold. Of course, as usual, the market can bring everything, so it's important you protect yourself in participating in this long. I hope this video is useful, and I hope you can profit from this. As I said, there is the potential here for a huge move into the 141 area when everybody is speaking about a strong dollar and a weak euro. That's where we can have surprises. And don't forget that the euro has been going up and down during the whole crisis. So the fact that there are bad news out doesn't mean that the euro dollar will go to zero or will go lower. Thank you very much for your attention. I want to remind you that I also have a free newsletter. You can go to my website and subscribe for free. I share my much more details on the setups and long-term reviews on the dollar, the S&P 500 and other major pairs, along with the dollar index, of course. And I also have I also analyze stocks, and I also write articles on program trading, the method I use, HFT, frequency trading, and other articles that can help your trading. I also have a free book coming out that I will make available on my blog. It's about the key concepts to correct trading behavior, and specifically speaks about those important key concepts reframed in a world of program trading and HF, high frequency trading. So thank you very much for your attention. I wish you a very good day and good weekend as well, and be safe, be careful. Today's Friday, so the market are not as technical as other days. Thank you very much for your attention. Bye bye.